Another one. Hey, remember this song? This TikTok trip was looking kind of lit. Alright. Alright, let's get into it. Let's get into this trade. Hold on. Alright. Let's get into it. Let's get into today's trade. Today was about as free as money gets. I mean, I'm pretty sure Trump was like, yo, sorry about last week. Sorry about that whole shenanigans. Let me bless y'all up for the free. Like, let me just give y'all some free bread. It's basically what he told me. And as you can see from this price action, I mean, I'm about to explain it to you. It's probably the easiest thing you've ever learned. All right, so coming into market, we had these London highs, and then I marked out buy sides on these hourly highs right here and here, and then we had London lows, Asian lows, hourly lows. Over here, same kind of deal. Hourly lows, London lows, Asian lows, London highs, and then we just have buy side up here. Market opens, and we get a rip up, sweeping out London highs and this buy side liquidity, but it does not on ES. What does that mean? It means we have a bearish SMT. About as free as it gets right now. We have a bearish SMT. Alright, cool. Going into that, I'm showing you guys the trade that I had. Alright, so before I get any further into this, I had 3 trades. I had one that I actually took. I had another one later on the PM session that was another free trade. And then one this morning that I would have top ticked, but I'll have to go a little deeper into that and show you my whole process. But anyways, like the normal strat goes, once we get a sweep of liquidity and SMT, you know, we're fucking, oh, my bad for the language, we are super bearish. Super bearish. We come down, break 5-minute structure right here, break 5-minute structure right here, bet. Okay, once we break 5-minute structure right here, we come up into this 5-minute fair value gap. Once we get into that 5-minute fair value gap, what do we look for? Shoot, what I just dragged. Oh, wait, I dragged this. Well, once we get to that 5-minute fair value gap, what do we look for? We look for a 1-minute invalidation of bullish order flow. Okay, and we get that from this inverse fair value gap right here. Our inverse fair value gap is right here. As you see, comes down, we enter right here now, and then stops are London. Once I start trading with like 2-3 contracts, then I'll have another take profit at Asians. But right now I'm just doing Londons, and they get a 1-to-153. And technically, right now, actually in the beginning it wasn't. It was actually less than a 1 because I do stops above the high, so it was like it was a butt trade because this candle was looking kind of fat. But if you guys watched the video, like the sped up video of me taking the trade and managing it and all that, then you see that eventually I move my stops up here above this fair value gap. Once it comes into it and once it respects it, then I move it above this fair value gap just to get a better RR. Okay, that's why I moved it. That's why it's a 1-to-156. You know, just to give me a better RR. Once it respected this, I honestly was thinking about doubling my position as soon as it came into this 1-minute fair value gap and then got a leg out of it. I was going to put another trade right here and then stops above the high and bang for another, but I just decided no, we'll just have this trade. Okay, that's basically the trade for this morning. Easy as can be. Cool. Moving on. Why do I have, oh wait, I remember this. Alright, now let me show you the trade that you could have taken, and I haven't really done much backtesting. This is why I did not take this trade. Oh wait, yeah, this one's not even right. It's this one already. Oh yeah, it's this one. But I haven't done this much backtesting, but I want to. This is a possible strategy for anyone that wants to listen to this. Like, it's a possible strategy. It's on a liquidity sweep on the 5-minute. If you get an SMT like we did this time, and as soon as you get a 1-minute inverse fair value gap or bigger structure, you enter. And you probably have a greater RR, but a lower risk to reward. A better risk to reward, but a lower win percentage because obviously you don't have that much confluence. But I mean, as you can tell on the past 2 markups that I've had, past 2 days, it's smacked both times, and this time's nothing different. Okay, as you can see, we come up, we sweep out both these liquidities. ES does not, so then we go on NQ, we look for an inverse fair value gap. and that's what we get on the 1 minute. As soon as that happens, we get inverse fair value gap right here. You could enter right here. Enter right here, stops below the high, and then targeting London. Now I don't know the whole. See, the only reason why I don't do that currently right now is because I haven't done that much back testing on this particular strategy. So I don't know the risk to reward to win rate ratio. I don't know if it's a profitable strategy. But as it's been looking like right now, it's looking pretty profitable. Especially because also in my head going into this, how I trade is I always look at 5 minute structure. Yeah, I always look at the 5 minute. I just like that order flow. You know, if it's in bullish order flow, then I'm bullish. If it's in bearish, but then as you see, we come up, we sweep, and then we stay below this high. We don't, and we close under it. So you could have taken that as we did not break structure, but we did have this like little fair value gap that I thought mattered. So if this, but I was thinking about since it didn't break structure on the 5 minute, going into the 1 minute. Right, as soon as it inverts this, and then we had this little tiny 1 minute fair value gap bearish, it comes up into it, and then we get a leg out of it. I was actually going to enter here. This was going to be my entry, and then it stops above the third candlestick, or that candlestick that made it, and then obviously first take profit would have been London. All right, now that was. We could have taken. I just didn't. I'd much rather like my setups, the strategy that's been cooking for me recently than trying to switch it up. I know my chart kind of looks like a mess. Anyways, going on to the PM session. PM session, we have this easy trade that you could have taken. It's using the exact same strategy. Price is fractile, so it's the exact same thing. What do I use? I use imbalances, equilibrium, and liquidity. Okay. Imbalances, equilibrium, and liquidity. So when price comes into hourly imbalance, hourly liquidity, or sweeps hourly equilibrium, that's what I look for. I tend to be reversal. What do we get right here? This is PM session, starts at like 2. So what do we get right here? We have this 1 hour fair value gap. It's kind of small, but still significant. Okay. What do we get out of that? As soon as we come into it, we react. We inverse this 5 minute fair value gap right here. We inverse this 5 minute fair value gap right here. As soon as we inverse that 5 minute fair value gap, we barely do, but we do. As soon as we inverse that 5 minute fair value gap, I look to see equilibrium get hit. Equilibrium comes down, it gets touched right here with this candle. Now I'm looking for a 1 minute validation of bearish order flow since we broke bearish structure. Or since we broke bullish structure, now we need to look to break it back up. We break it right here with this inverse. We get filled. I did take this on the paper trading account. We get filled right here. Stops below the low, targeting news or this high, and then my second TP, which if I didn't get stopped out at break even, would have been the top of this fair value gap. But obviously we didn't get there. And bang! I mean, just easy trades today. Like really easy trades today. I mean, I think I'm seeing the market really clear right now. Just that this trade's easy. This trade's easy as long as you look at how I look at it, like market, or as soon as the 5 minute breaks, and we could possibly get into a reversal. Look for a 5 minute continuation confluence, and then for that to get tapped into, and then a 1 minute validation of that order flow. I mean, I think you'll be golden, and that was golden. It's been really simple. I'm thinking about. Don't know, because I've been having a lot of success with this. I don't really want to mess it up, but I mean, as you can see, I was literally 2 minutes away from changing my 1 to 156 to like almost 3, and I wouldn't have even gotten reversed back and stopped out of break even. So I'm thinking maybe as soon as it comes down and sweeps this, I bring my stop right here, and then if it keeps going down, then I'll just keep it at that London. So no matter what, I make my money. But anyways, that's what I'm thinking of right now. But yeah, I mean, super easy trading day. That's the trade we picked up for the day. Easy. Made like $1,000. So, we've been on a roll. Other than that, I'll see you guys tomorrow. Yeah.